All right, so let's begin the show and let's talk about the changes in LTCG and STCG. That's going to impact your international investments via mutual funds, and there we talk about investing through ETFs or fund of funds, and also the impact on gold and commodities. Overall, as we all know, 12.5% LTCG and short-term capital gains gone up to almost 20%. Now, depending on the asset class and the nature of your investment duration, the mode of investment mainly, the taxation might differ. So what is going to be the right strategy for you? Let's decode all of this. I have with me Sandipan Roy from Motilal Oswal Private Wealth. Sandipan, hi, good evening and welcome to the show. All right, so we really know about the changes now as far as LTCG and STG is concerned announced in the budget. Having said that, what is going to be the right mode of investment as far as gold is concerned and the kind of tax treatment we are talking about? Because if we have a non-listed way of investing in gold, the investment duration or the LTCG duration goes up to almost 24 months. Okay, would you want to start with this, explaining this particular aspect of investment in gold?
Yeah, sure. So the budget actually gave a clarification that or made changes that on listed securities, your taxation or your LTCG will be after 1 year. And accordingly, gold ETF, silver ETF, as also your InvITs and REITs, they thus came down from their LTCG holding periods to from previous 36 months, etc., to 12 months. So basically, a gold ETF and a silver ETF, if you invest today, it will have a LTCG or a long-term capital gains holding period of 12 months, and it will be taxed at 12.5%. STCG obviously, will be at your 20%, or rather at your slab rate, okay, because it's on equity. So on the other hand, on inter or if you do a fund of fund or an index fund, let's say funds which feed into the gold ETF or the silver ETF, however there the long term holding period becomes 24 months. So your 12.5% taxation only comes in after 24 months. So, which is I may say it's an anomaly, but that's how it is. On ETF investment, you will have 12 months. And for index fund of fund investment, you will have 24 months.
All right. Talking about your international exposure now, how is this a change impacting that aspect of your mutual fund investment? Talking about investing in international equities via ETF, investing via fund of funds. How can we look at it now?
Yeah, so that has become very, very advantageous now compared to before, when it was being taxed as part of debt fund taxation. And that was disadvantageous because ultimately we're doing an equity investment. That obviously has been addressed. And for international funds, you will have a 24 months, 12.5% long-term capital gains.
Sandeep, now let's look at, strategizing this particular change in your portfolio. Now, obviously we know that, looking at these tax changes, one should not be aligning the investment strategy, but to get the maximum out of it, how should you be strategizing this particular change in your portfolio?
Yeah, I think two, three things are happening, and I may make uh, a sweeping comment here, but I think debt funds have completely lost their luster and their attractiveness, specifically from a taxation perspective, and that part of a portfolio needs to be revised and relooked at. It needs to be restructured now. I think multi-asset allocation funds make a lot of sense now. Uh, be it ones that were more debt oriented or the ones that are more equity oriented. Either ways, I think multi-asset allocation funds will become a segment of the fund category to really invest into as part of your debt allocation, as part of your gold and silver allocation as well. There are funds which were erstwhile, let's say, indexation kind of funds, which were between 35 to 65% into equity. Those funds today will get or after April 1st April 2025 onwards, will have an LTCG of 12.5% after 24 months, whereas your equity-oriented ones, where you had 65% or more in equity in multi-asset, those will be taxed as 12.5% after 12 months. So that obviously, and that will be happening from now actually. So both multi-asset allocation funds would have a taxation change, which will be effective now after 23rd July, after the budget. And there on equity-oriented multi-asset allocation funds, you will have 12.5% taxation after 12 months. And on debt-oriented multi-asset allocation funds, you will have 12.5% after 24 months. Actually, it's not debt-oriented anymore. It will be multi-asset properly. Gold, silver, and debt and equity all will come into those funds. So debt-oriented mutual funds, actually, the definition is also changing come 1st of April 2025, when anything with more than 65% in debt-oriented instruments will be defined as debt mutual fund and hence will be taxed at your slab rate. Everything else obviously falls into either 12 months or 24 months LTCG.
Right. So overall, can we say that any particular category has become more attractive after this change? Can there be one pick around this?
Yeah, so as I said, I think the biggest pick for us for investors would be multi-asset allocation funds. There are funds like ICICI Pru multi-asset, White Oak multi-asset, DSP multi-asset, host of funds in that category, and one can look at them basis their own risk-reward analysis or their advisors' advice. But that category, I think, is the most attractive category to play out this asset allocation game now, given the tax changes as well.
All right, it's all up to the investors now as to how they want to place this particular category in their portfolio. Looking at the diversification already provided in this particular fund, one has to be very careful about having the right approach in terms of placement and in terms of exposure to this particular fund in their portfolio. With that, the time is up for this particular discussion on this segment, Sandipan. Thank you so much for taking time out and helping our viewers understand all of this today. Thank you.
If you like this video, then like, share and subscribe to ET Now.